Today on the show, we are talking about fixing home loans. We've had a bit of interest rate movement. We're talking about someone who wants to buy an investment property and also talking about their home loan and what to do with that. But also we're going to talk about a career change for someone who's in a physio role in a hospital. What would they do? We'll also talk about, I think I saw a question in there, John, about credit card points.
I'm looking forward to the community segment.
And a commie segment for all the communists out there. We've got a community segment of the week, but I'll get you to read this first one, Johnson.
Yes, so I'm about to fix our home loan, which means no more offset for 2 years. We have $30,000 in there currently, and our other bank accounts are very messy. Looking for a way to keep it clean and tidy. I like to have things separate. Right now we have $30,000 offset with ING and a bank account for food, daycare bills, daycare fees, bill money, 3 separate accounts with Bank West. This was pure laziness on my part. After we changed from Bank West, we never swapped the accounts.
Part 2. Do you want to read it from the screen?
Part 2
Just so
says...
it looks better on camera. They're big glasses.
Small head.
Yeah, okay.
Yeah. They're standard size.
I reckon we could get you some other glasses that doesn't age you as much.
For me, it's not about the look, Glen.
Yeah, that's right.
Some
Anyway.
some are vain, some aren't. You know.
All right, let's continue.
I don't need them now.
No.
Our new mortgage will be with ANZ, so looking for the best approach to have my money separate in one place. Should I just open multiple accounts with ANZ and close all the others and have one card for bills? How do you separate your money? This is the easiest way for me to follow a budget.
Yeah. So what do you reckon?
Well, obviously these glasses are too big, so I've got to change them for a start.
Well, not too big. I just think maybe the silver colour, like the silver frame, maybe ages you a little bit too much.
Yeah, well, there you go. What am I going to do with this situation?
Because I think if we can agree that if you have a money system that works and you're getting results, what's the problem?
Why upset it?
Yeah.
Well, we get a lot of fodder, don't we, in our life from different bits and pieces, people that we run into or something online, or there's always the next flashest best thing, like a new pair of glasses, for example.
Exactly.
So, I don't know if you materialistically need to think about it too much. Like from a financial point of view, you've got to confuse yourself to the point where you're actually happy with it. Now, what I mean by that is you could have 3 cards, all separated, all doing their own thing. Financially, it might not be the best outcome, but you're happy with it.
Yeah.
What are you happy with? That's probably the first part.
Yeah, so I think what I'll do is I'll just draw and I'll explain it for those who are just listening only. When I teach the Glen James spending plan, for example, they're refinancing to ANZ.
Yeah.
So what I would probably say is we'll have one account here, and I teach to have a cash hub. And usually that will be an offset account. So we'll put the mortgage there. It might be, I don't know, $1 million mortgage, whatever the mortgage might be. And we've got our cash hub, and all our wages go into this, whether it's fortnightly, monthly, weekly, whatever. And then out of that cash hub, we have our fixed bills, obviously the mortgage repayment will come out of that cash hub. Anything that's literally direct debit fixed. And then what I say is, and this individual had Bank West, what I teach is for the sake of ease, segregation, quarantine, not overspending, if you're a spender, if you're a saver, giving the savers permission to spend, is set up a weekly transfer. So regardless of fortnightly, monthly, or weekly pay, a weekly transfer over to the Bank West account, and that is for your food, fuel, going out, entertainment. Just
non-discretional.
Just weekly, and then that is the only card you have on your Apple phone. It's the only card in your wallet, because that just creates separation of the business side of your finance. And then based on ANZ, surely you'd be able to have multiple offsets in this day and age. I don't know if ANZ.
No, I don't know if they do. But
Either way, conceptually,
let's say they don't.
even if they don't, I would still have a separate account over here, maybe even 3.
Like savings accounts.
Yeah, one for the emergency fund, one for gifts, clothes, holidays, Christmas, and one for just maybe savings.
Because those.
And then each week transfer to those an amount. And I mean, so if you want to nerd out and check out the spreadsheet that I teach this, just Google the Glen James spending plan.
Yeah, so
It's a free online course and spreadsheet.
So coming back to what I was mentioning before, like financially, that may be the best structure.
Yeah.
But for someone else, they might say, well, over the dotted line, I want 3 accounts as opposed to 1. Like over there with
the
your
Bank West.
your bills and your petrol and whatever. Like you've got to understand your own personality, don't you?
Yeah.
And see what's going to work for you.
Yeah.
Like you can follow a system that should work for everyone, but it doesn't.
Yeah,
so we've got to change it.
I'm just a fan of quarantining our money. So that account is just for this.
Yeah.
Now that's whether you're a spender or saver.
Agree.
Just so you know.
Yeah.
It's very clear. I'm also a fan of removing the bulk of our savings or money that we're saving. Some people call them a sinking fund and all that stuff throughout the year. I'm also in favor of removing that from our day-to-day site.
Agree.
And literally having a separate account that you just pay yourself once a week to do this, to do that. And I think the reason why I don't love because a lot of the banks do all this technology stuff, multiple accounts with the one bank, you can run into troubles with the behaviour side. So having the 2 separate institutions just allow a split.
It does.
So that's, to answer the question, how do you separate your money? That's how I do it.
Yeah. So they need to find out what their easiest method of doing it is.
Yep. And I will say, so part of the Glen James spending plan, you put in income 1 if there's a spouse or partner, income 2 if there's child support, whatever, all income throughout the year goes into the cash hub. All fixed bills that we know will come out of there, so cash will build up in there. And then we just automate our savings each week as well. And this is crazy, I've got multiple rental properties paying into my cash hub.
As long as you understand what their financials are doing in the back end.
Yeah, which I've got systems
Yeah.
to do that, where some people will be like, well, I've got 3 properties, I need an account for each property. I'm just like, I've got a system that works for me. Yeah. It's really simple because the mortgages also come out of that cash hub.
Yeah. So in some ways saying you do you, but here's a template that you can start with. But looking at that, you mentioned the hub and then the amount that goes out weekly, you said, to that account that crosses the line.
Yep.
Yeah, which is for the listeners is like your petrol, your bills, your
cafe.
Yeah.
No, not bills.
Not bills?
Literally stuff that you need to spend week on week.
Okay, so
don't
petrol,
use your brain for. Groceries, petrol, pickleball that night.
Yeah.
Just ad hoc stuff.
Okay. So
food, fuel, entertainment.
And you send that across weekly because it is a weekly expense and reoccurring. How do we go with someone that's paid fortnightly? We get enough in advance so that it won't affect that?
But that's exactly what I said. Over here, whether you pay fortnightly or monthly, we're still paying ourselves weekly over.
Okay, so what if someone can't get their head around that?
They need to first seed the cash hub. It's just a bit of a float.
Have an amount, say $5,000, whatever it is.
Yeah, just float it. If it's too, we just have to, if you've got a money system that isn't working, your system might suck. Try my system. If you follow my instructions and you don't pull money out of the cash hub to buy something that is a luxury, my system will work.
Yeah.
But you might need to seed it to get the ball rolling.
Yeah, okay.
So that's how I do it. But it's a good question, and I think we always need to go back to this bread and butter of money management because everything that we do in life falls on money coming in and out of our life. And to be a financial success, we need to catch as much money as possible.
Yeah, so we conceptually agree that money into one account and money out in 1,000 different ways out of that same account does not work.
For some people it does. For most people it doesn't.
Yeah, I personally haven't seen that work.
Yeah.
Because there's too much going on and there's too much visibility around. It's too easy to say, oh, well, I'm not getting paid till next week. I've still got $1,000, $2,000 left. What do we do with it? So we've got to be extremely disciplined if we're going with that system.
So I think if we turn this up to 11, so I've pretty much detailed how I manage my own money. So I've got a cash hub that receives income from multiple investment properties and has multiple mortgages leave there. It's a full-on, in the Sort Your Money Out book, I talked about Atlanta Airport. I think it was that book. Busiest airport in the world. You know, a plane could be delayed in Atlanta and cause a regional jet in Seattle to be delayed.
Yeah.
And that's the same with our money. You've got to have a really good system because a misspend here or a miscalculation there could cause delays down the line. Now, that's how I manage money. And if you do want to check out the Glen James Spending Plan, it's my free online course. I'll recommend you do that now because in the coming months, I am going to reshoot it all and re-update the spreadsheet. I didn't reply to your email, John, but I'm going to get someone professional to make a spreadsheet because I don't think it's good enough to use the bank's built-in analytics and have the multiple accounts with one bank because that doesn't help people who want to get better with money, the behavior thing. We have to break something to reset to get people on a behavioral system that works. And I think, like I say, don't outsource your weight loss to a milkshake or a diet shake. You may get results in the very short term, but you're not learning the habits and behaviors. Like you need to actually put all your numbers down, visually see how a system works. Anyway, so that's how I do it. How do you do it? You've got multiple investment properties. Do you have a stroke when you think that I've got all my rental income and all my expenses for rental properties and personal insurances and all this coming out of the one cash hub?
Yes. I have a little bit more visibility. So full disclosure, I'm with CBA for majority of what I do, which has unlimited offsets.
Yeah. And I think I'm with Bankwest that has similar, which is CBA.
So love that feature
Yeah.
that you can just name them whatever you want.
Yeah.
And that works for us. So yeah, investment property hubs sitting there in isolation so we can see what is in each of those investment accounts at any one time.
So are you saying for property A, 21 Smith Street, there's a bank account with incoming and outgoing
Correct.
and buffer
Yeah.
for each property?
Yes. Yeah.
Well, that's why you're more sophisticated.
Well, no, it's
Well,
not.
but
It's
my
just,
system works and I'm happy with it.
Well, and that's what I'm getting at is like for this question, like what does everyone do? You're taking all that, scraping it and saying, well, what's going to work for me? Because you don't want it to be, I'm awake at night thinking about this. It doesn't need to be stressful. It just like it's behaviours, it's personality, it's all those things rolled into one to see what works. And that does take a bit of trial and error. Until I had this multiple offset account thing going on, it wasn't working for me and it wasn't ideal either. But we do then have like that you mentioned over there, the weekly account, which is generally for food, and that runs out on about day 2 with 3 kids and a dog. We also have an ING separate account that is another sort of cash/fun holiday account. So, yeah, it's not complicated, but it works.
So, and this is it. I was just looking on my phone. I actually got in trouble on YouTube the other day, John.
All right.
Someone said it's disrespectful to guests when I look at my phone. But I often am doing it because I'm looking up something for the conversation.
Yeah, there you go. Well,
so maybe what I need to do, John, is just put the camera on you so I can sit here looking at my phone.
Yeah, well,
and the camera's not on me, and
It was like that day when I got called for looking at my watch, and the audience was thinking that I just wanted to go home.
That's right. Yeah. So the purpose of the YouTube is we are still doing a podcast It just so happens there's a camera on it so people can see in the background.
Oh, look, there's a lot going on.
So full disclosure as well, my weekly spend account is with UpBank. Now, Up has the capacity to have multiple savings accounts and all this stuff, but that doesn't help the behavioral side for me. And then what I do, to my point, is on this system, right? So if we have a look here, my weekly spend account, at the moment I'm doing $550 a week for
We spend
my food, fuel, going out, like literally whatever.
wow.
Is that not much or too much?
Yeah, our food, 600.
That's what I mean. Like, this is me. Like, it might be $200 a week for food only, right?
Yeah.
So, but I live by myself.
Yeah.
I do the meal service and it's all that. But I tell people, I want you to do the Glen James spending plan and use it. Forget credit cards, forget getting cute. You know, if your money system sucks and you're not making progress, try my system.
Yeah.
Number one. But then I want you to outgrow it as you start to get more confident and you're not going to slip back into your different behaviors. One thing I do discuss, I think there's an advanced part in the spending plan online course. On my Up bank account, in the Savers tab, I don't even think there's much there. No. I've got a second bank account, a little savings account linked to my cash hub with ad hoc spare amounts of money. So at the end of, I pay myself that $550 every Wednesday. If it can't, like today we're recording on Wednesday, sometimes there's $100 left.
Yeah.
So then I would move that $100 to my little savings account.
Right.
And that there, so at the moment, I don't usually have that go up more than $1,000. At the moment, there's 327 just on my Up account.
Yeah.
For no other reason. If I see something, I'm like, yeah, I'll impulse and buy that.
Okay. So
I
it
got
doesn't
$100 there. It's not wrecking my whole system.
Yeah, okay. So that doesn't go to ETFs or
No, it's just not spoken. It's literally just spare money.
Bonus.
I won't have more than $1,000 in that.
Yeah.
But that's just more of an advanced play because each week, if you're transferring money over each week to your spending account, and I talk about in the Glen James spending plan, each week, every week, if there's $100 left over, you're doing too much. Reduce it.
Yeah.
Put that money to work. But if it's, well, some weeks, like, and I can tell you right now, today's Wednesday, John, because we were in New Zealand last week.
Yeah.
I've got $26 available in my account.
Yeah.
Right now.
Till when?
Tonight I get $550.
Yeah.
So my system works because most Wednesdays come, what is it now, 1 p.m. on Wednesday. Yeah. I got lunch in the fridge, no real plans. I don't need any money.
Yeah.
I got $26. I feel poor, but no, the system's working because there's $550 going to walk through the door tonight.
Well, you can get a McHappy meal on the way home or something.
I can. So, and like, so that I use that account in New Zealand for the Lime scooters, had dinner at Newcastle Yacht Club the other night, Foodworks, Coles, McDonald's. Anyway, it doesn't matter.
So
just have a system that works.
Yeah, one thing with the offset account, like we all get wrapped up in this, how powerful the offset account is. Don't let that take charge of your system whereby you don't want to take money and put it in another account because you want all your money to offset the debt. So I think you need to be smart in that respect as well. So don't worry about putting some funds to another bank account that's not linked because that's going to be out of sight, out of mind that you can comfortably work to.
Yeah. So anyway, and then I guess phase 2, a lot of people were like, oh, should we use a credit card daily? It's like, well, the Glen James spending plan is not set up for that. Simple.
Yeah.
Because you've clearly got a system that, but if you've got the credit card and you spend daily and you've paid interest no, don't use a credit card. You cannot use it. So I would say one thing, if you were going to use my system with a credit card, I would only use it to pay fixed bills and have that money get paid out of the cash hub once a month. not using it for day-to-day. Like, sure, pay your $3,000 insurance with it, pay your friggin', I don't know, your whatever with it, phone bill, do all that.
I think we're going to answer a question on that too.
Yeah, I think there is one. Anyway, all that to say, my name is Glen James, joined by John Pidgeon today. Might be a bit of a longer episode, but we're here for it. And you're listening to Money, Money, Money. Before we get into it, this show is general advice only, and I've got a license to provide that advice. Full details can be found in the show notes. I'm a former financial advisor. Now I do the Money, Money, Money podcast. If you're a regular here, we call it M3, and we do a podcast called Retire Right. I've got a book, The Quick Start Guide to Investing, is available wherever good books are sold. There's a link in the show notes if you want to turn up your investing to 11, or if you're just getting started. Let's get into it. Thank you so much for being here today. Okay, in having a long segment at the start, I forgot to do the sponsor shout out, John, but this episode is brought to you by Sphere Home Loans. Look, we are pro mortgage broker. We're living in an environment where, over 75% of mortgages in Australia are now placed by mortgage brokers. I don't see any reason why you would not go to a mortgage broker in the first instance if you want a new home, a first home, a second home, an investment property. And I can categorically tell you, if you talk to Rach and the team at Sphere Home Loans and they look at your situation, if you're with some, farm, milk cow, sheep shearing bank union of Australia, something like that, and they can't get a better deal based on your circumstance, they will just tell you, go back to who you're with. So that's why I've got confidence in having such companies sponsor and promote the podcast, because they will, if they can't help, they won't just bend over backwards to make $1. They'll be like, no, you best go there. It's a win-win. And the minute any of these brands that sponsor my podcast blatantly screw people, John, well, they're not going to be part of our world anymore. So anyway,
and
it's a weird sponsor shout out. But
chatting to her yesterday, that it's an interesting dynamic at the minute, because the roller coaster of mortgage brokers is only going one way, and that's it's increased so much in the last 10 years, hasn't it? Yeah. So anyway, thanks to Sphere Home Loans for supporting the podcast. Okay, what is the best way to structure an investment property loan? My principal place of residence is worth 1.9 mil. Call it 2 ton. Outstanding loan is just 700. I am confused. Should I do 2 split loans or just one? Example, I borrowed 20% plus cost for the next property as a deposit, then go and buy IP worth 750 to 900. Depending on servicing loan, I can get and then split that loan as well. Sometimes when I read things, everyone, number one, I can't read that good. Trust me, I've read a few audiobooks terribly. Sometimes the grammar and the flow of people's questions that we just paste verbatim are really hard. Then go buy investment property worth 900K, depending on servicing loan, I get, and then split the loan as well. Is it better to have one PPOR loan plus 2 splits, or one split loan, 20% deposit plus costs and remainder? I'm also buying a car which will need worth 65K. Is it better to use the refinance money or go get a separate car loan in the near future when time permits? We also want a second investment property. Far out. What's the best structure so it is best used in terms of borrowing and tax benefits plus future buying investment properties? Holy dooly. Yeah, let's break that down a bit, shall we?
So I'm going to draw this while we talk about it. So at the moment, John, we've got the house, we'll just call it 2 mil because it'll probably be worth that in 10 minutes. There's a 700K mortgage on that. So let's just assume for maths that there's $1 million mortgage, right?
But there's 700?
Yeah, but I just want to now move to a concrete example to explain.
All right.
So we're just going to slightly change and just talk conceptually how to structure this.
Gotcha.
So if there's a $2 million property with a $1 million mortgage, there's $1 million of equity, which means there might only be $800,000 of usable equity left over.
So 2 mil times 80% is 1.6 minus the mortgage of $1 million is 600K usable.
So it's less than that. So 600K.
600K of usable.
Okay, so based on the 600K of usable equity, so that's the house. We'll just draw a mortgage there. So that's the 1 mil.
I mean, you could get more than the 600 if you had LMI waivers and high servicing and that, but let's just keep it plain and simple.
So how would you structure if they wanted to buy the first investment property worth $1 million, right? Would you literally set up 80% of that property or 800 grand mortgage secured against the investment property and a loan secured against of 200 grand against the existing property?
So first of all, there's a couple of things that we need to outline.
Yep.
Number one is we're thinking about the end game before we're doing anything. So they said they want 2 houses and a car loan or a car.
Can we forget the car for 10 minutes?
Well, yeah, but we're just thinking 5 years in advance, not next minute to be able to say that. So understand that first. And then the second part of this is doesn't really matter how it's structured. It's what the money's being used for tax purposes, right? Your accountant, a good accountant will sort that out no end. But you want separate accounts, which is what they're alluding to, which is great. So you say, right, I'm going to buy $1 million investment property. I want to put down a 20% deposit. So I take 200 from that 600. That leaves 400 still sitting there if you choose to do it that way. My 200 plus my stamps, so it'd be a bit more than that, is going to be a separate loan coming off your principal place of residence. And then you're going to have another loan for $800K. So once you've got that completed, you've essentially got the 3 loans. You've got your 800, you've got your 200 and stamps, and your $1 million still sitting on your home principal place. 2 of those loans are tax deductible, the 200 and the 800.
Yep.
Yeah. So you're telling your accountant that, you're date stamping that, and that's they're separate. You can see the interest payable, etc. Now, whether that's principal and interest or interest only is another story.
Yeah.
But essentially, that's the most, I suppose, sensible way to structure it. You then rinse and repeat for the second property. So you're taking equity again from the owner-occupier. You should have roughly 350 grand after you paid stamp on the first one. And then you're using that as your deposit and costs for investment property too. So that should be as complicated as it needs to be. Nothing more complicated than that. Now, if it's with the same lender or it's with a separate lender, doesn't really matter for the 80% because you might have a situation where that 200 coming from your principal place for the deposit on investment property 1, that's from that same lender, it's got to be. But then the 800 might be from another lender. That's fine as well.
Yeah. So I've basically drawn pretty much what John, is that a fair statement?
Yeah.
We've got the $1 million non-tax deductible debt on this $2 million property.
Yeah.
That stays. That's non-tax deductible. We'll assume there's 600 grand of usable equity, and then we'll just say they're buying 2 investment properties at once. We've got a loan split of 200 plus costs, which is the 20% of the $1 million, the $2 million investment properties.
Yeah.
And then another loan split against the house of 200. And then, as you said, John, the first investment property, they might use Bank West. This could be St. George over here with 3 St. George mortgages.
Yeah.
The first property could be with Bank West with the 80% secured against the property itself.
Yeah.
This one here could be with ANZ.
Yeah. Now, banks have dominance, some banks more than others, and a lot of them will give you a better rate if you bring all your business to them. So a lot of cases, this will all be with one lender, but it doesn't need to be. You might get a better offering. Just ensure that you've got a structure that looks similar to that, or they're not cross-securitized if you can avoid it.
Yeah. So that basically means regardless of this property 2 here, if this property 2 went to shat and it was worth 500 grand halved in price, you could literally still get rid of it and it wouldn't impact
Property one,
which is your house. Yeah. So we don't want to cross the security. No. Any broker worth anything would never cross-collateralize.
If they did, they've just got to – the client's got to understand the risks. And
there could be – and this – I actually had prepped this question to have Rach here from Sphere, but she couldn't hang around today.
So someone less educated.
Yeah, that's right.
For you.
Exactly.
But
the whole thing is, with the car thing, sure, you could – and actually I did a whole episode on cars and I answered a question with someone who had equity and they had a car loan. I would say a couple of things. Usually when you own property and you go to a dealer or a finance company for a car loan, the rates are pretty good because they know that you're a personal guarantee, you own a house, if you can't pay, they'll get the meat from there.
Yeah.
So they kind of, dealer finance can actually be quite okay for cars.
Yeah.
I'm kind of the view that you would, and this is, I think this is a high income household. They want to buy a $60,000 car. I'm probably chatting with the broker before they buy anything first to make sure that, because the last thing you want to do is get a car loan or drop 65 grand on a car and it impacts your borrowing. But if someone walked up with 3 properties, you'd get a car loan at the click of her fingers.
Yeah, and that's what I've said at the start. You've got to look 5 years in advance, say, well, I'm going to get a car after these 2 properties or before. Broker, play out some scenarios for me, because you could, like as you said, you could get a loan for that car from the dealership. Let's call it 6%, and do your numbers on those repayments over 3 years. Or you could take a chunk of equity there and do the same thing. And you can pay that equity down as quick as you want.
Yeah, so my first line of doing car finance in this situation, if we go back to this diagram, they could literally set up another mortgage worth $65,000 against the house.
Yeah.
And buy a car with it, go to Vegas with it, buy a boat, spend it, whatever, right? Because there's got security there. What I would caution is why you need to check with your broker. And I've been on this kind of this car finance. Like, I'm not a huge believer in car finance. Like, in the last 8 years, every car I've had, I've just paid for it and got it in my life. But I know in the real world, people finance cars, and I'm not getting mad anymore if people do that.
Well, that's good.
But what I would say is, do not have a car loan that the term is more than 4 years. Try and put 10 or 20% into it. Because if someone puts 20% of the car value into the loan throughout the 4 years, there's a very high chance that the car will be worth, as the car depreciates, you're basically prepaying the depreciation. As the car depreciates over the 4 years, the car won't be worth less than what you owe for it. Like, it'll be pretty parity.
So you're not negative equity.
Yeah, so that's what I'm saying. Now, when it comes to whether we use the mortgage for the car loan or not, this is where you really need to speak with your broker. Sure, in a perfect world, I would want you to put this 65% loan split here on 65K loan split on principal and interest with a 4-year term.
Yeah.
The problem you may have if you do it before property 2 or property 1, that could penalise your borrowing capacity because it's a mortgage and it's a 4-year term, which is a higher payment.
Okay. So if you didn't do that and just left it at 30, you can just offset it.
You can, but this is where I think you still not need to be getting rid of your car loan within 4 years.
Yeah, correct. So the aim is to offset it all within 4 years.
Yeah, but do people do that?
Don't know. But that's your way around that's why you talk to that broker.
Now, if you're like Glenny boy James over here, which granted, if you're this financially successful, you probably aren't like me. Well, I'm pretty financially successful, I guess. But either way, what I'm doing is if the banks say no, or the mortgage broker says no, it's going to be best to have your car loan on 30 years so we can get the other lending happening. Do you think you can pay this off within 4 years? You're like, yeah, sure, no worries.
Yeah.
You don't want a car loan hanging around for 30 years.
No.
I would then just go, well, I'm going to put the first property to bed, do the servicing for the second property. I'm just going to go get dealer finance, 4 years, put deposit down, get on with your life.
Yeah. Yeah. It depends how tight your servicing would be, but absolutely you want to play this out.
You're juggling servicing for future growth. As you said, it's like, what's the 5-year runway look like? So you're juggling the servicing of multiple properties, a new car, but also overlay what's your natural proclivity like.
Yeah.
I just don't want you to get a car loan that's a 30-year term.
No, and I agree. It's not ideal to have car finance or any loan on an asset that's going down in value. And some vehicles more than others in terms of its value deceleration. But I think, it's a balance of lifestyle, isn't it? And necessities versus wants and needs and everything else. So I think plan it out. Don't just go and get a car loan and then like, I might actually buy a property now. Oh, hang on, I can't.
Yeah, but also that's interesting you say that, John. The same situation, if you're wanting to buy your first home, your second home, an investment property, and you've got cash in the bank and a car loan, don't be like, oh, I'm going to pay off this loan now, then go to the broker. Go to the broker first. Because they'll go, no, we need that cash for the thing. We can swing around and sort that out later.
Yeah, because you're servicing strong.
Yeah, so there is a bit of strategy there.
Totally. Good broker will sort that.
But if in doubt, most people, if you own property, if you can't refinance off the mortgage, going to a dealership, you'll be surprised what happens with dealer car finance. Well, however, don't let them con you into doing 5 to 7 year terms.
No.
4-year term, put 20% down. And one of the reasons I say put 20% down, not just the prepaying the depreciation so you feel it, it will slow you down. Oh, I don't have 10 grand to put in. Okay, don't buy a 50 grand car.
Yeah, they'll want the loan term as long as possible.
Where the dealers will be like, yeah, we can get you into that 65 grand Merc over 7 years, $98 a week or whatever the amount is. Probably more than that. But so, yeah, I'm just don't do it. Question. I'm a hospital physio and I have been for 20 years. And while it used to be a job that paid well, I feel like it is not increased at all with the current cost of living. And I think most people would say that, regardless of the physio status. Would love your opinions on how to earn more money or make a career switch into something that pays better. I've thought about going into personal finance as I love crunching numbers and doing our budget. Well, there's no money in that. But the thought of starting from scratch is, again, overwhelming. And I will just say, if you are listening to this still and you don't know, we actually have another podcast called This Is Work.
Yes.
And Shell hosts that, and it's all about work, leadership at work, all that good stuff. So if you're a HR leader or you're interested in work and all that, check out the show This Is Work. But I mean, what are you saying to old mate here? So they're 20 years. We might say they're in their 40s, maybe, if they've done it straight from school.
Yeah.
They want to earn more money or make a career switch. See, so this sounds to me that they don't hate their job.
No, and that's the first question I'd ask is what's your enjoyment factor? If you were paid 50 grand more, what's your enjoyment factor? Because and I'm not a physio. I know a lot of physios. I actually spoke to one yesterday on a clarity call, and they were earning awesome money as in a private practice, and they did have some ownership in that private practice, but they love what they did, and their income was quite solid. So if your enjoyment factor's there, I would say, is there something else within the industry that's going to work for you, i.e. private versus hospital? Unfortunately, that's a feel-good place to be. However, if it's not paying your way and giving you what you want for the cost of living, we've got to make some changes. So that's the first part. Career switch, yes. Are you up for that, and what would it be? Is it just, am I chasing something that is just dollar figures, as opposed to, am I going to enjoy that? Am I going to be passionate about it? Have I got the same care for that, etc.? So I'm reluctant to career switch when it's just driven by remuneration. What are you smirking at?
I'm just having one of those experiences, and it might be imposter syndrome, it might be something. I'm like, we're sitting in a shed in Bennett's Green talking with absolute confidence.
Yeah.
I don't know what to do in any situation. But
yeah, but you can speak from life skills and who you've spoken to. And
I just think it's funny. I
experiences.
just feel like a fraud every other week because I don't know. It's just, but what I would say, we recently ran the unofficial income guide survey. And if it's not out when this is released, it is coming soon. So we asked...
And this might be where this is coming from.
Yeah. We asked over 1,000 people in our Facebook group about their job, their income, qualifications, and all that stuff. So then I'll produce a report with high-level findings, and I've already started to look at the data. I'm then going to probably maybe see and try and turn it into a PR op to get some other interviews about it. It is wild, but I would say the people that were making, there was a huge cohort of people making good money were in leadership and management.
Yeah.
So when we talk about jobs, for example, there's that thing with I'm a school teacher, I'm a hospital nurse, or I'm a physio that's employed by the hospital. More times than not, you're going to be governed by pay bands. And that's why it's now a job discussion. Or no, it's a career discussion because that job of physio in hospital, I need more money. Well, you can do all the wishing and wanting and needing that you want. You ain't getting any unless the band changes. So that's why it's now a career discussion. And then what you can do is go, okay, so how do we use the skills that we've got to get – you're going to have to do something else if you don't like the money with what you're doing. And this person knows that.
Yeah.
But we're not saying leave physio. And then what I did, and this is where people don't realize they get stuck and can't see the forest for the trees. What I did is, and I would encourage everyone to do this, put details of your job or your role into AI. And again, AI is good. Thought starter, 70% of the lifting. I said, as a hospital physiotherapist, what are 5 top transferable skills that I've got?
Yeah.
First one, clinical reasoning and complex problem solving. Like that is what you do. Forget physio. Like that's what you do. Communication across different audiences, patients, families, nurses, doctors. Yep. Like you're a full-on project manager, communication.
Conduit.
Multidisciplinary teamwork and collaboration, which is kind of similar than the first one. Time management and prioritization under pressure. Behavioral change and motivational skills. You help patients overcome fear, pain, resistance, and low confidence. And even like I had this big, I haven't mentioned it on this show, but I had mentioned, I was on a podcast in New Zealand last week, Making Sense with Francis Cook. And I just gone to the physio the week before because of my ankle, all right? Anyway, it's lots to unpack. But basically, he was helping me do this behavioral change and mindset stuff.
Right.
Like we're on the floor doing side plank leg raises, right? And I legitimately, it was it's probably a bigger discussion. I said to him, and the penny dropped in my life. And again, he said to me, I said, so will this fix the problem? Because I'm working on my ankle and my calf muscle's been aching since November.
Yeah.
I don't know why. It might be some medication. Anyway. And I'm like, will this fix the problem? Or will I have to do this every couple of days for the rest of my life?
Yeah.
And he went on, I'll send him this clip because it's good, and it's Robert at Advanced Physio Warners Bay, really good physio. And he said, I'm literally laying on the floor. And he starts going to, and this is just funny because it's right. And when people tell you stuff that's right and it annoys you, you get upset because you know it's right. And he started going on to me about, well, health is best wealth, and you do money, you go investing and all that. And I'm like, yeah, that's fine, but just I get it. They would tell me, do I have to do this forever?
Yeah.
And I think the answer was basically, well, you got to keep moving forever.
Something.
And then at that moment, John, I had this penny drop moment because I was in a foul mood, like in pain every day, ankle rooted, and I better hurry because I'm actually getting a cortisone injection in my foot in an hour.
And you've gone off the topic of the question.
And go with me, everyone. Whatever. Don't have to listen if you don't want. And I'm like, my mindset is just so crap.
Yeah.
And
sounds like that.
Yeah. And then I'm like, I need a mindset coach.
Yeah, that's
because
right.
I've got a fixed mindset. I'm just, this is not good. I've got to change something. And, I've been off the meds with anxiety and depression for 8 weeks now, and I'm really trying to do the next half of my life differently.
Work through, yeah.
And I'm like, Googling mindset coach, and I'm like, oh, Ben Cousins. Have you heard of him?
The AFL footballer?
No. The guy,
Ben Crow.
Ben Crow.
Yes, geez, they're opposite ends of the spectrum. Those
and I'm like, I'm Googling, I saw Dom, who'd been on the show before from Atlassian, was interviewing him, Dom Price from Atlassian. I think it's Dom Price. Anyway, whatever.
Yeah.
And I'm like, oh, yeah, Ben Crow. I'm like, so I bought his book, started listening to his book. This guy's really good.
Yeah.
And the first chapter of his book changed so much.
Yeah, he's unreal.
And then I'm like, I might see if I can get. And then he just released. I'm like, he's way too popular and famous for me to use.
Ash Barty.
Or to come on the show. But anyway, so all that to say, the physio, there are skills there that you don't know that are transferable. Yeah, no, absolutely. But I think it's just we go through this stage where you come out of school, a lot of people don't know what they want to do. They might go to uni, not sure if they want to do that degree, but they'll do it. And then you wake up 20 years later, like maybe this example, it's like, hang on a minute. At 18, I wasn't thinking about how much I'm going to be paid when I'm 40. So it's like, okay, if you could teach your 18-year-old that, okay, in 20 years' time, if financial wealth's important, that you've got to have a progressional, I suppose, scale, would they focus at that stage? Probably not. But understanding that it makes the world go round. And unfortunately, hospital physios, nurses, teachers, like they're starting to be down the bottom end of the pay scale now. Oh, it's so bad. Like it's really bad. I mean, the state governments have been asleep at the wheel with funding frontline workers. Yeah, I think it takes courage to first of all ask the question, but also then searching to do something about it. Yeah. So one thing, I actually messaged my friend Callum, who was actually in, I think, our career book. We did a case study on him. Sort your career out and make more money. I sent him a message, at 12 o'clock, so an hour and a half ago. Can you do a dot point summary of your career title since physio, please? Anyway, he hasn't responded. But all that to say, good chat. In the career book at the time, Callum was a hospital physio. Right. And it wasn't more the old mate was saying that I don't like the money, I need more money. Yeah. He was like, I hate this. Then he took his skills and because he's like, I want to do something more white collar or corporate and get more money as well and I don't like this.
Yeah.
He got a job at a insurance company that did insurance claims
Right.
for musculoskeletal claims.
Yeah.
So if you got your income protection or your disability cover.
That's Callum from Victoria.
Yeah, but they moved back to Sydney.
Oh, are they?
Yeah.
There you go.
Yeah.
Okay.
John got him a property, didn't you?
Yeah.
They sold it, made heaps of money.
You're welcome.
Anyway, so all that to say, Callum now, he did – so basically what happened, and I'm sure the questioner is the same, really switched on, got all these skills. You can go and learn the processes of insurance claims because they'll teach you, because they needed someone who really knew musculoskeletal stuff.
Yeah.
So when the report came in and they're like, oh, this income protection claim, they've hurt their Achilles and can't work for 3 months, a musculoskeletal physio or whatever, based on that, they're pulling our leg.
Yeah.
Let's press harder. Or no, that's legit.
I saw him walking down the street. They shouldn't be able to walk.
Yeah. So he did that, and then at the group insurance company he was working, and if you've met Callum, my friend, you'll know if there's a problem, he'll fix it. Ended up helping them with systems and processes. Right. He's now moved on. I think worked for another company. I think he was consulting for NAB in change management.
Right.
Because he was in corporate in claims, physio. Got the thing is like, well, we're redoing the systems and processes here.
Yeah.
All right, I've outgrown this. There's a job as a business analyst or change manager contractor at NAB.
Yeah.
Go for that.
Yeah.
Went from his 90 grand a year at the physio to 250 probably in a matter of 3 to 4 years.
Yeah. Just because of his skill set. That he didn't maybe know was transferable beforehand.
Or he did, and he went for it. And so all that to say, with our income and our careers, I was thinking about this driving into the studio today. So I've got friends visiting Australia at the moment, the time of recording. He moved up to the States 5 years ago, hadn't been back since, so they've been here. And I'm like, oh, you're going to come back down? It's like, we'd like to, but we can't afford a house and all that stuff. And it's just got me thinking, there's a lot of people in Australia that can't afford a house. Yep. There's a lot of people in Australia that can't afford to invest more to generate more money because we can't afford it. But the one thing that we can afford to do that doesn't cost money in the main is give our career attention.
Yeah.
And that's when you'll get the actual return. Now, it's not easy, but it's worth it if you want it. You might be happy on your current salary. You might be happy on your current job, your 9 to 5, your 8 to 4, or whatever you're doing. That could be fine. But if you are listening to this and you've seen, because I think the median income that I saw from the 1,000 people that we surveyed, this is individual income, including superannuation. Guess what it was?
How many people? 1,000.
1,000 people who listened to the podcast.
Yeah. 130?
160, including super and overtime and in terms of total earnings.
Yeah.
So that's why when we release the unofficial income guide, and look out for it, everyone, we'll email everyone, we'll talk about it, I'll do an episode and go through the details. You've got to hang around people that you want to be like. Now, you can be there and be like, oh, I see all these people with these high incomes. It must be spam, it must be fake. It's like, no, it's real. Trust me. Now, you can either be sour and jealous and have a covetous vibe over those people, or you can look at the unofficial income guide that I've produced, download, because I'll give the raw data out to everyone. You can upload it to Excel. You can filter the column that says training and education. You could untick uni qualified, masters, all that stuff, and just tick on the job training. Yeah. Have a look at all the incomes from on the job training. Have a look. You can choose to be active in your life and your career and go get them, Tiger, or you can choose to stay there and whinge and take no action. I don't care what you choose. John doesn't care what you choose, but I would encourage you to make a choice with one of them and get at it. And if the choice is, no, I'm happy with this, and I'm happy to be a whinger, well, get at it and stay there, but shut up.
Yeah.
All right, cool.
Good rant.
Yeah, we'll be back right after this.
If you're after personal financial advice, don't get it from a podcast. But if you want guidance tailored to your situation, head to moneypodcast.com.au and click Get Help. We'll connect you with one of our trusted professionals, financial advisors and mortgage brokers, who work with people right across Australia. No matter where you are, they can help. Now, before we get back to the show, a quick reminder to protect your financial life. That means having income protection sorted. It means having death cover if there's any debt or dependents relying on you. It means getting your personal insurance in order. Most people insure their car, they insure their house, but what about themselves? Sky Wealth, who support this podcast, are specialist financial advisors who can help you get the right cover in place. Their advice is often more comprehensive and better value than going direct through your super. Book a complimentary 15-minute chat at sky.com.au. That's skye.com.au. And they'll point you in the right direction.
All right, we are back. It is a bit of a longer episode today, but whatever. We haven't had a solo or a dual one together for a bit, have we?
Been a way.
All right, the communist segment of the week. We asked you in the Facebook group, and remember, if you want to join the Facebook group and you're not in there, if it says, where did you hear about the group? You put, I heard Glen and John on episode 911 because we'll know you're not spam. We asked you, you're given a full year off work on your current pay, no catch. What do you do with the time? What are you doing? I'm probably just still working because I've got nothing else to do.
Yeah. So I would still, if you mapped out a day, I'd get up, I'd still train. I would still do some sort of work. Whatever that may be at the time, 2 or 3 or 4 hours, about lunchtime, early arvo. And then I reckon I'd probably, spend some time with my wife.
She'd like that.
She would, hopefully, for a bit of time. And then, roll into the evening.
I think this is interesting because you and I, we would say we'll probably just keep doing what we're doing.
Yeah.
Because we don't inherently hate what we do.
No.
And it is more just our life.
Yeah. Yeah, it's the old pick and choose what you do when you want with who you want. So,
but if I couldn't do work.
Yeah. And I suppose it's very hard to put ourselves in the shoes of someone that gets up, starts at the same time, finishes at the same time and is told what to do and when to do it sort of thing.
Yeah, to be honest, if they say, Glenn, you can't do what you're doing now for a year, here's the money.
Yeah. What would you do?
I'd be no joke, a depressed, anxious ball because you've taken my routine.
Yeah.
You've taken what I like.
But would you're still getting paid the same.
What am I going to do with my time?
But would you travel?
Oh, yeah, I'd do that. But
yeah,
even when I go traveling overseas, I still like to pick up the laptop and do a few things.
Yeah.
Just because the problem when I get into the relax mode, it allows my brain to think of things to do and work on. And I'm like, oh, yeah, I can do that because I've got the free time now.
Yeah. Yeah, there's an element of relevance about it all, isn't it?
All right, do you want to read some of these?
Yeah, Laura says spend 80% of my time with my kids creating memories, spend 10% of that time on myself and self-care and spend 10% of the time volunteering.
Unforgettable Flamingo, surf most days, walk the dog, spend time reading and learning a language.
Helene says, enjoy the simple things like walking my kids to and from school, being present at assemblies and events, not rushing everywhere all the time, volunteer my time at canteens or associations, take time to prepare truly delicious meals, travel.
Malachi. I reckon there's one Malachi in the group. We've got to get him on the show. I've seen his name. He comments on all these community segments of the week.
Yeah.
So Malachi, come and do a My Money Story episode. I'll travel the world eating and cooking with locals, turn it into a TV show with recipes and cookbooks.
Sounds like we need him in studio so he can cook.
Yeah.
Wendy, finish all the jobs around the house that aren't done yet. Explore the local area like a tourist instead of just living here and always travelling further afield.
Whoops. Sylvie, get another job and make bank to save for my dream home and set myself up for early retirement when my husband and I can go on an awesome adventure together.
Scott, grab the passport, bike and hit the road.
Well, sounds like we've got to hit the sky if we're grabbing the passport. Nabucco, live and work in Europe. That's interesting. So there's a couple of things there where people are still wanting to work.
Yeah, well, I think for a majority that do enjoy what they do from 9 to 5, they want to continue it.
Yeah.
But depends how old you are. It'd be interesting to see what age these people are as well.
Awesome. Well, that was the community segment of the week. We cancelled our credit cards a while ago, but we've noticed the hit in our ability to earn frequent flyer points. Wow. We used to use these for all our domestic travel to see family. We don't need a credit card, but we're considering signing up for one with a sign-on bonus, having to pay the first year annual fee, then cancelling it within the first 12 months. All right, do that then. Next.
Question over.
Does anyone else do this? And do you have any issues with credit ratings as well?
Go for it. I think if I can go, if that's paid for domestic travel to see family, that's lifestyle, that's most important to them in life. And the flyer points conceptually haven't cost them anymore. They're going to spend that money anyway. Where's the downside? Maybe an annual fee.
So the question is, if it's a $450 annual fee and you're spending throughout the year
Anyway,
and
you're not going above that just
covers
because of the points.
The classic rewards seats. Like you can, and this is where I'm just at the stage where it's like, sure, go for it, but you've got to realize, peeps, like the whole reasons credit cards exist because most of the people spend more and end up paying the interest payments that pay for the 20% who can use them.
Correct.
Now,
but
everyone thinks that they're not in the 20%.
Yeah.
Everyone, 100% of people, when they get the credit card, will go, I'm going to use this responsibly. Of course, I'll pay it off each month. 100% of people who sign up for the first time would think that. How many people would actually sign up for a credit card to be like, I'm getting this card for the points, I'm getting this card, and I probably won't pay it off each month, and I'm probably happy to pay $90 a month in interest. Like, how many people actually go into it thinking that? I would say close to zero.
Yeah, be occasional realist, but yeah.
But
I think it doesn't take much to set it up. And look, I'm neither here nor there. Like, if you go and do what you want to do to get – because I see that outcome and I think domestic travel to see family, that's a great outcome. Okay, can we do it another way just by saving and not using a card? Maybe. But if that's not impacting their life and they're disciplined enough to pay it on time, which is pretty easy to do, let's be honest. You get a statement, here's the balance, pay it 5 days before the due date and move on to the next month. Like, it's not difficult to miss that, is it?
Well, so I don't use credit. Like at the start of the episode we talked about I use my Upbank for my day-to-day crap.
Yeah.
I've got one in the business that I've talked about.
Yeah.
So all the team have one with Amex. I can see that, Jess has bought this, Rach has bought that, Ryan's bought – that's all fine.
So you do that? Like you pay it on time?
Yeah, well, to that, I've just got an automatic debit set up.
There you go.
Like I've never missed a payment. And the way but I didn't – the credit card in the business I've got for more admin ease. So
yeah, not recreation.
Like ANZ Business was just – that was so useless with trying to set up cards for team members. Like they had to go into branches. They had to do Amex, literally log in, Ryan, Jess, Rach, cards.
They've nailed it.
And, we've got over $30,000 a year of subscriptions, right?
Yeah.
With all the cloud chat and
yeah.
So, we get points and it's kind of, I'll take them and use them. And for example, when we went to New Zealand, and I've done this when we've done tours with the staff, because the Qantas Business Rewards, it adds up with the staff, I'll just click upgrade where possible.
Yeah.
So when we came back from part of the trip from Auckland, Ryan got upgraded business with me. And I was like, yeah, 12,500 points, sweet.
Nice.
But I'm not setting up my business and my life being the point hunter, because you go down that road, you end up spending more. Like the mass data and the aggregate says you spend more.
Okay, so this person, let's say that they're not going hunting for points. They're just doing it. They're living their life as normal.
Sounds like they are, but sure, go on.
Well, we all are, to be honest.
Yeah.
Like, we're looking at how many points we've got, and the upgrade wouldn't have occurred if you didn't have that point system.
But also life would have gone on.
It would have.
But
we wouldn't have a show to answer this question. Like, you look at it and say, well, okay, first part of this, does anyone do this? Yes. Are you disciplined enough to do this? If the answer is yes, I don't have a problem with it.
Yeah.
Right? Second part of it is issues with credit ratings, don't know. I haven't personally been affected by it.
Yeah, and this is the thing. In Australia, if they did this once, if you're doing this once, getting the points, I mean, it just sounds, are they saying they're going to sign up, get the points, do the minimum spend, cancel it within the first 12 months and rinse and repeat?
Correct. And I haven't done that.
If you did it once off, you've got no issues. If you did that consistently, your credit file will be impacted. In Australia, there is no such thing as a credit score. There is a big thing about my credit score. There's 3 credit bureaus in Australia: Equifax, Ilion, and
don't know the other one.
Yeah. Anyway, they might have even changed that. Anyway, of the 3 credit bureaus, they'll have their internal score that they give people. But when you go and get a mortgage with the mortgage broker, the banks and lenders, they're not saying, well, John Pidgeon, you did a 900. And sure, there could be a thing where within the 3 bureaus, over 800 they wave through or something like. But what they're doing is they're looking at the data to form a credit profile to see if you are worthy. Now, if it said that you've got Citibank 1 year, HSBC the next year, ANZ the next year, Qantas the next year version, that could have an impact that it could impact your credit profile, and a bank or lender might not want to lend to you.
Yeah.
Or it could impact the rate that they give you. It could do that. But I'm just saying, does anyone else do this? Lots of people do it, but you'll end up spending more if you are literally churning cards. And everyone, I just can guarantee everyone who says they do it, they're a great success and all that. But we know that the big data says on balance, and you've actually got to understand how the point system works, right? So John Solvair Wealth, right? You could literally go to Qantas and say, I want to enroll in the points program. So what you could do is you could say to Qantas, I'd like to buy 500,000 points from you. Then you buy the points from them. And then you say, if you book a clarity call and you give me your Qantas number, we'll do dollar for dollar. So what's a clarity call? $500?
$450.
$450. For every clarity call that you have with us, give us your credit card number, you'll get $450 worth of points because you have bought the points from Qantas in your business. You've used that as a marketing tool to lure spending. That's how the point system works.
Yeah.
And then what happens over time, so just last week at the time of recording, Qantas, they inflate the points over time. It used to cost 10,000 points for a business upgrade from Brisbane to Newcastle. I used to do it, 10,000 points, bam, get dinner on the way home, done. It's now 12,500 points.
Yeah. Yeah, but that's inflation. They want people to spend more money.
That's right. Like this whole thing is, So my first thing, okay, if you want to do it, But just don't whinge when you spend more and you've got a balance left and you're like, you go out to dinner with 8 people and you're like, I'll put it on my card to get the extra points. You put it on the card, you've paid $800, $100 ahead, you forget to chase up 2 people, you're $200 out.
Yeah. That's right.
It can get costly very fast, death by 1,000 cuts.
Yeah, that's the dance you run with. Check what your personality's like.
And you can, and everyone can look up online the studies of fMRI when they've done these functioning. I think it's the F's functioning. Had an MRI going, and they've got people to pay, or imagine paying with cash and paying with credit. There is no pain associated with the credit spend. Because it wasn't their money.
No.
So anyway, psychology. Cool. Can we do this in 2 minutes, John? Told you we're having a long show today, everyone.
I think it's worth...
Do you want to...
Yeah. So,
I'll read it and you answer it. How about that?
Yeah.
And then we're going because I've got to go. I've actually got to go in 10 minutes. I'm looking for opinions, experiences, feedback on solar panel / battery purchases. Do you think it's worth buying solar panels and batteries out of our emergency fund, halving it? No. Whilst the rebates are occurring, or do you think using one of the companies that allow us to pay the approximate amount we would normally pay on bills to pay back over our 5? No. So basically, I was being sloppy then.
No and no.
A bit of information on us. We have a young family with 2 kids and live in a 3-bedroom townhouse. We are in New South Wales. I mean, what do you reckon?
All right. So I've got solar panels, 27 of them in total, 10 kilowatt system, no battery. The rebate you get on solar is poor at best, and we're in an environment where there's sun most of the year. There's no trees. Like it's a fantastic spot to take advantage of the solar. So I don't think it's from that point of view. If you're trying to reduce your electricity bill, yes, that will happen, but not as much as you probably wanted to or think it will do. But for the environment, fantastic. So if you're going down that path, yeah, absolutely worthwhile from that end. Batteries, I think there's rebates out at the minute, or some incentives to basically get the battery, and there I think are a long way down the track than they were when we first got solar on, to the point where they're lasting longer. They obviously can store your energy for use when you want. I think they're much better than they were, but it's an outlay. You're probably looking, I don't know, circa sort of 8 to 10 grand, I would have thought, at the minute. So would I use my emergency fund? No. I don't know the other option. Like, I wouldn't want to pay it back over 5 to 10 years either. I don't know. I don't think either of them are great options.
Yeah. I think what I would do, and I was just looking up, so we've put solar on the studio here. Mm-hmm. So there's a 15 kilowatt system and a 32 kilowatt battery with the big gateway and all that stuff. I think it was under between 23 and 25 grand, I think.
Yeah, that'd be about right.
So that includes the that's after the rebate. So with the government, and I don't actually know if it's state-based. Oh, no, it's probably federal. You can use the rebate once for the batteries. So that's why I got the higher batteries. Yeah. So this building could probably run for, it's 2 kilowatt, probably 15 hours straight on battery.
Yeah.
So most of the day, we're not using power, using battery. At night, no one's here anyway, and it's drawing 1.5 kilowatt, just everything off. We leave the air cons on upstairs in the office 24/7 because the computer fans make it quite hot in there and all that. Yeah. But all that to say, my friend, so that was call it 25 grand, right? Including the scissor lift hire and everything. And the guys that we used, if you are in Newcastle, Electrified Industries. Now, I'll tell you why I used these guys. Number one, when he came to site and quote, he said a couple of things to me with some of the existing stuff that I knew he wasn't a cowboy. Like there was a J box out the back. It's like, I would have never mounted that way because of the water sitting on it.
Yeah,
would have this.
yeah,
So I was just like, okay, this guy actually cares. Number one, that was just a little breadcrumb of his work ethic and craftsmanship. Number two, good price and nice guy. So if you're in the Newcastle area, Electrified Industries, and they did all the applications and everything, and most of them would. Yeah. I'm not a fan of doing these things where they'll come and do it and you pay it back because you're going to get screwed. You're literally getting a loan. They're burying it in the cost of it's just – and then secondly, I would encourage everyone to get 3 quotes.
Yeah.
Because my mate Tim Cooper from Wyong, they got a quote with 2 companies. He sent it to me. This is just gouging territory. The house without a battery, 15 kilowatt system, 25 grand.
Yeah, wow. Yeah. No, we were the same when we put ours on.
So
they vary a lot.
All that to say is back to the questioner here. Yeah. I mean, if you want to halve your emergency fund, you knock yourself out. But I'm not going to say use your emergency fund for stuff that isn't an emergency. I would say get 3 quotes to buy the solar panels and the batteries outright and put a plan in place to save for that and pay it with cash. Don't do it if you're going to leave the house within 5 years because there's probably going to be a 5-year payback window.
At least. And I suppose the question is how long the rebate's going to be around for.
Yeah, I haven't seen any chatter that they're cancelling them. No. But the rebate, I think, remember, is for the battery, not the panels.
Only the battery.
Yeah. I would get – and also, questioner, you can do it in stages as well. Get a quote just for the panels and tell them stage 2, we might do batteries and the gateway or whatever. Yeah. I don't know.
Yeah, well, that's what we're tossing up at the minute.
Yeah. You should talk to this guy, Matt.
I think I did.
You did?
Didn't
I don't know.
No. Someone.
They would work at Toowoon. And they just, so get 3 quotes, pay cash, pay once, and get on with your life because I believe there is too much dickery in that industry to be getting sucked into, we'll install it for free and
yeah. Okay. So just hypothetical, if we've got an emergency fund set up, but this costs say 20 grand.
And the emergency fund is 40.
Yeah. So can we carve off 20? Not ideal, but your risk profile is your risk profile. If you want to get it done, go for it. But how long would it take you to save that 20 grand? If it takes them 3 years, I don't know, I'm just going worst case scenario, it takes them 3 years to do that. That's not an ideal outcome either. So there's got to be a bit of to and fro to be able to get a result if this is important to them.
Yeah. And that's what I mean. I'm just not using emergency funding for stuff that isn't an emergency.
No.
Anyway.
But you do you.
Or doing any of this crap that we're...
definitely not the latter.
Because what they do, they just literally they'll just bury it and there'll be one of those things where they're charging you probably 10 grand more. Like it's so wild, that industry. So at least if you are in the Newcastle, Central Coast, Port Stephens, I'm sure Electrified, the guy's name's Matt.
Yeah.
I personally use them. They were good. I didn't get screwed.
And there'll be a mat equivalent around the country.
That's right. You've just got to find your mat.
Quotes,
as long as they're not a doormat. All right, friends. You've been Real. I've been Glenn. And this has been...
John
and Money. We did a long episode today. Hour and 20 minutes. Should edit down to about an hour and 15. Okay, bye.
Yeah.
Any advice is general financial advice only, which does not take into account your objectives, financial situation, or needs. Because of that, you should consider if the advice is appropriate to you and your needs before acting on the information. If you do choose to buy a financial product, read the Product Disclosure Statement, PDS, and Target Market Determination, TMD, and obtain appropriate financial advice tailored to your needs. Simo Interactive Pty Ltd, the publisher of this podcast, and Glen James are authorised representatives of Money Sherpa Pty Ltd, which holds financial services licence 451289. Opinions or comments from any guests on the podcast are theirs and not those of the host or the publisher or their respective licence holders.